What's the difference between unearned service income and service income? Usually, we ask this question when we're dealing with advance collections from customers, which is still one of the subtopics under adjustments or adjusting entries. Unearned service income or revenue represent that portion of advance collection that is not yet rendered. For us to use this account, again, there must be collection in advance or payment received from customers for service that is yet to be rendered or performed. While service income, also service revenue, represents service already rendered regardless if it's paid or not by the customer. Again, whether paid or not, for as long as the service is performed or delivered, then we will record that as service income or service revenue. Assume that on December 1, the company collected training fee amounting to 300,000 for a 3-month training program which will commence on the same month until Feb of next year. If we are going to journalize the transaction, for simplicity using a liability method, on December 1, it would be a debit to cash, 300,000, and a credit to unearned service income or unearned service revenue, they're just the same, 300,000. Analysis for the actual balances at this time. The unearned service income, which is our liability at this point, would be 300,000, the full amount. Then the service income or the service revenue is equal to 0 because the service is not yet rendered. Then on December 31, assuming this is the end of the accounting period, we will recognize now that earned portion as a debit to unearned service income and a credit to service income 100,000. Okay, at this point, the balances, the correct balances at this time, unearned service income, which is our current liability, will be equal to 200,000. How come? 300,000 minus the 100,000 earned. Then that earned will be our service income or revenue amount. So, service income or revenue at this point, 300,000 divided by 3, that's 100 per month for December training. Mind that when we prepared the adjusting entry, we debited and credited the amount earned, which is for the liability method only, not the actual balances, meaning the remaining balance. Why? Because adjusting entry again is that what you do to bring the accounts to their correct balances.